Welcome back. Still watching the newsroom right here on ETNow. Siddharth Sanyal, Chief Economist at Bandhan Bank, is joining us now. A lot of interesting developments happening in the macros. Rupee, for one, is falling consistently for almost 6 days now, ever since there's been a nudge from the RBI side. But also, otherwise too, global macros also playing dollar, etc. Siddharth, good afternoon. Thank you so much for joining us. How are you reading into the knock which the rupee is consistently taking, and how are you analyzing the overall factors behind it?
Sure. Thanks for having me here. And I would say that this is not too surprising. And more than the RBI nudge, as you mentioned, I would possibly assign a very significant weightage of the overall COVID infection situation. Basically, if someone wants to take a step back, how things had been playing on the external front a few months back, there was a period when we had been enjoying a rare period, rather, when India was enjoying a period of surplus, both on the current account and capital account. Now, given the movement in commodity prices, etc., in 2021, there will be a period when there will be the usual pattern of current accounts deficit. So the question, rupee's fate in the near term will be linked more with the capital account flows, so equity market flows or bond flows. Now, interestingly, while there was current and capital account surplus, rupee didn't appreciate that much in 2020, but it appreciated quite a bit towards the fag end of FY21, when two things happened. One, India started outperforming other countries very significantly on the COVID situation, and government very clearly promised a big push to growth. Now, 2 months down the line, unfortunately, the COVID situation in India has worsened quite a bit all of a sudden, and that's why the future growth prospect is all of a sudden is again facing a lot of question marks all of a sudden. So, in that kind of a situation, the capital account flows, equity market flows in particular, if you see what is happening in the equity market today with the news of lockdown, etc., is very clearly posing new questions and new challenges, and it's not too unexpected, not too surprising that rupee has adjusted to a new level over the course of the last few days.
Right. Siddharth, also, how are you analyzing the impact of the possible lockdown in Maharashtra, which is being spoken about, and stricter norms in 5 to 6 states which are seeing a surge in COVID cases? The overall macro impact on the GDP growth going forward?
Right. Again, now the numbers which we are facing of late is really, really very high. But one ray of hope is that our better preparedness at various levels. Human bodies are actually biologically better prepared to deal with the virus. The medical system is better prepared, possibly, as well as policymakers are better prepared and businesses are better prepared compared to where we stood about a year back. So that way there is some buffer. But having said that, the way the infections have spread and the numbers have multiplied over the course of the last couple of weeks in particular is really, really a concern, and we need to stay watchful about that. So far, I would tend to say, even though the numbers are spreading across the country to some extent, it's still concentrated to a few states, a lot more. But unfortunately, those states contribute quite a bit of our overall GDP, and that's why that remains some kind of a concern. So overall, I would tend to say we'll remain very watchful about to what extent or at what level we tend to arrest the fresh infections. Better preparedness at various levels is one positive factor in 2021 compared to 2020. But if the disease starts spreading significantly in other parts of the country, then one would have to really look at the growth forecast, etc., very, very significantly. Now, one particular factor here, you might not see that completely in Q1, just in terms of numbers, because you enjoy massively positive base effect, and that's why your numbers for Q1 of FY22 will still be pretty decent. But I think one would really have to be very watchful about how things pan out on an incremental basis or beyond Q1 of FY22.
All right, Siddharth, we'll let you go on that one. Thanks so much for joining us on the show today. Well, that was an economist's view on what's happening right now in the environment due to COVID, etc., and the macros. But also, let's get your industrialist view.